Hello everyone, welcome back to my channel. I am Nondumiso Njangase, and as you can see today, I am not alone. I have a very special guest, and yes, I still have the book stand, but it's just a different one, a nice one at that. Anyway, so for those of you who are new to the channel, please subscribe and also hit the notification bell so that you get notified when there is new content out, like this great content that we're going to be creating today. And I'm sure you're wondering, who is this pretty girl? This is my friend, my very dear friend, Patricia Komani. She is an accountant by profession. She is a lot of things. Her accolades are just yeah. She is also an author of this journal called Reset Vision Journal. Please get it. It has helped me a lot put down my vision. And there's like a whole lot of great insights in there. I've also contributed to it to, just say, listen guys, what you need to know about finances as well. So please get it. I'm going to leave her details in the description box. She also has a page on Facebook called Tricia's Thoughts. It's very great. She gives various insights on various topics, so please check it out. Go follow her on Facebook and also contact her for this amazing journal. So yeah, Patricia, do you want to say hi to the subscribers?
Hello subscribers, but I would like to say hi to my mom, my dad.
okay, this is not that type of show.
Oh, okay, my bad.
Oh my gosh. Okay, all right. Anyway, okay, yeah. Oh, okay, Patricia, this video needs to be short because me and her can actually talk for hours, and we can't do this today. Today it's a very informative video. So introduce yourself so we can continue.
Hi everyone. My name is Patricia. Like she said, I think you've said it all. I'm an accountant by profession, a tax practitioner by profession. I love writing, and yeah, I love God.
The God part is very important. Anyway, so yeah. So today we are talking all things financial statements. So this is basically for investors, especially new investors, to actually understand why you need to look at financial statements and what you have to look out for in the financial statements, right? Because I mean, I've done a video where I tell people what I look out for when I'm trying to purchase a share, right? And one of the things I mentioned was the fact that I look at the financial statements. But I thought, let me not do a video on my own about financial statements, because there are people who are more close to, the topic than me. Patricia just yesterday was submitting financial statements for one of the companies she works with. So I thought she was best placed in, discussing with us about financial statements, what to look out for in financial statements, because it's quite crucial information. So yeah, just to kick off, Patricia, why do we even have to look at financial statements? What is the purpose of the financial statement?
Well, the purpose of financial statements in general would be to give information to the stakeholders. Stakeholders would be the shareholders who are investors, in this case, yourself. It would be employees of the company if they are interested in knowing what's going on in the company. And sometimes you are working for the company, but you don't really know what's happening. And you get surprised, jiggy, the company's shutting down, like what's going on.
Yeah.
But if you actually had gone through the financial statements, you'd actually see what has been happening and that it's not really a surprise, right?
Yeah.
As well as the creditors, the people who you owe money to. They want to know what is your financial status or what is your financial situation. Are you able to pay them back? And as well, let's say you want to do a tender, right? This is now the company wants to do a tender.
Yeah.
Or you want to get a bigger loan. They will ask for your financial statements, because just as an investor, they want to see, is it worth my money being put into this or not?
Okay.
So that is the main purpose of the financial statements, as well as the regulatories, being the Companies Act requires that all companies need to prepare financial statements, whether it's audited or independent reviewed, but all companies need to prepare financial statements.
Okay.
You've got the CIPC where you actually register the company. They require for you at the end of each year, and every end of each year depends on when you registered your company,
or
right?
financial year,
And you need to submit those financial statements to them. As well, when you're submitting your income tax return for the company, SARS require the financial statements. So it's all the stakeholders, whether it be for regulatory purposes, investment purposes, your well-being as an employee, or just the creditors.
So it's quite an important document, the financial statements, because you're saying also regulators look at such a document. So it means it needs to be prepared with caution, and it has to also be credible. That's what it tells me. When you're explaining it, to say it even goes to SARS and all these other regulators, which means that let's just assume and cross fingers that information that is in there is accurate, right?
Correct.
Yeah, so I've seen financial statements, Patricia, that are like 500 pages. Like they're quite long. They're quite long documents. I don't know how you guys do it, sitting and preparing 500 pages worth of documents. So anyway, the reason why I'm saying that is that me as an investor, especially for new investors, am I supposed to be, looking at this 500 pages, all of it? Am I supposed to read it? Are there crucial things in these financial statements that I have to look out for in order for me to be able to make an informed decision as to whether to invest in a company or not? So what are those things that you feel, these are the top things? And maybe go back and answer the 500 pages. Am I supposed to read all of it?
Well, for somebody who's preparing them, I would hope that you read all the pages.
Yeah.
So what happens with a financial statement? You have what we call the financial statements themselves, right?
Yeah.
Which are 4 statements.
Yeah.
The statement of financial position, the statement of comprehensive and income, the statement of equity, the statement of cash flow. Okay. So those are your statements.
Okay.
Then the rest of the pages, it's literally notes and accounting policy. So this notes and accounting policy, they're breaking down the information that you see on the statement. The statement, you're only seeing numbers. For example, you'll see inventories 2,000 Rand. You don't really know what that means. But then if you go to the note will explain, okay, in this inventory we've got, if you're retail, apologies, if we're retail, we have I don't know, hats, we've got wigs, or whatever the case is. So it breaks down, so that's why the financial statements are usually so long, because of those notes and accounting policies. Then the accounting policies goes back to your whole of accuracy and credibility. They literally say, we have prepared this note based on wara wara wara. For interest statement section 1, it says da 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 da. So that also is included.
Okay.
But because this video needs to be short, to go to your question of, if you're an investor, what is the quickest way for you to just get the information that you want? I would say there's this note that is called going concern.
Okay.
Depending on who's preparing the financial statements, sometimes it's within the notes themselves, or at the beginning of the whole policy, the whole return.
You said it's called a
going concern.
Going concern. Okay.
Yeah. Sorry, the whole financial statements. I said return. The going concern literally just says, can this company survive next year?
That's actually quite an important note, because if you are an investor, because they're still open, they're still trading on the JSE, so you go and buy shares at this company, they might not survive the next year, and imali yakho ikwambe, so that's actually quite an important. So you said you would find it on either the first page or the last page of the financial statements.
Not necessarily the first page, but then one of the first pages within at the beginning, or under the notes, and then the notes is usually after the financial statements themselves.
Is it a long statement?
No, it's just usually a page. It's a note. It's just a page. You need to cut that part. It's a paragraph. It's a paragraph. The paragraph usually just says, my assets are my assets more than my liabilities, or are my liabilities more than my assets. What is equity? Equity, it's assets less liability, right? That's the value of your equity. So if your liabilities are more than your assets, then your equity is a negative. If your assets are more than your liabilities, then you're doing something well. So that's just the first summary of saying, what is happening? Is this company sustainable? You is it depending on debt? If your liabilities is more, that means it's depending on debt. Does it have its own cash flow? Then your assets will be more, because then obviously you have investments, you will have the actual cash flow in your bank account, liquidity. So that then shows that if you just look at that, you would conclude or assume that therefore whatever we're selling, we're actually making profit out of it. So we're not depending on more of the debt, but we're depending on our own cash flow. So therefore, this company, I can assume or I can conclude that it's sustainable. So that's what literally that note tells you from the beginning. And then the other thing, if I'm an investor, I would want to know whether there was any dividends that has been distributed or not. Because if you are distributing dividends, that means you're making money. If you're not distributing dividends and you're making money, then that means you're also conscious of what's going to happen in future. So you would rather withhold that just in case.
And you would rather withhold it in order for it to help you out when you're now in serious trouble, instead of giving it to shareholders and stuff. So, but just going back to the statement that you mentioned, the going concern statement. So you said it's called?
Going concern note.
Going concern note. Going back to that note, is it just a factual thing? So they will tell you the numbers and then it ends there, or would they tell you, okay, no, we feel like we're looking healthy? Or because I'm just asking this because if I'm a company and I know I'm not doing too well, I wouldn't want to mention that. I'll probably just tell them this is what the situation is, this is how the numbers look like, and then I end there. So is it more factual? Would see this is what's happening, or do they explain to say, guys, we don't think we're going to survive in the next year? Do you have it that honest? How to
I would say it's a combination of both.
Okay.
It's factual because the numbers tell the story.
True.
So it will literally say my assets are more than my liabilities, or my liabilities are more than my assets. So that's the factual part, right?
Okay.
Then the explanatory part would be, even though, let's assume that it's the other way around. So our liabilities is more than our assets. Then most probably will say, even though the liabilities are more than the assets, we do believe that we're still going concern because of whatever the situation is.
They'll give you an explanation.
We're giving an explanation like, okay, don't stress. It's not as bad as it looks.
Okay.
There's a reason behind of that. And because other companies use debt, not necessarily because they don't have it, but it's a quicker way of them to do big projects.
True. Before we continue with the other things that are important to look at, I just want to go back to the dividends part that you mentioned, because I've seen some companies that don't actually issue dividends. The example, I always go back to Purple Group. I think Purple Group, because they're still growing, instead of actually issuing dividends, they planting money back into the company instead of actually issuing dividends. So would you say that, okay, in certain instances, even though a company is not issuing dividends, it could still be, there still could be other reasons other than the fact that they just want to keep money?
If their liabilities is more and they're not making profit, they don't have money to issue dividends.
Okay.
So then therefore, even if they wanted to, they can't. They're not in the position to issue out dividends. But I think when we talk about dividends for investors specifically, it depends on you and what your goal or vision is. Do you want shares, or do you want to invest in a company that issues dividends, continuously? Then you'd obviously look at that financial statements and the prior financial statements just to see what the trend is. Or are you more concerned of the value of the company? Like company this like Pepco. You know that Pepco, it's not going anywhere anytime soon.
Okay.
We're assuming it's not going anywhere anytime soon, right? And or maybe let's not use Pepco, let's use Coca-Cola. I don't know, I haven't done research on Coca-Cola, so I don't know whether they issue dividends or not. But let's assume that they didn't. But Coca-Cola has been there before we're even born. And that's one thing that people love drinking, for whatever reason.
We're always gonna need Coca-Cola.
We're always gonna need Coca-Cola. So for that company, I might be interested in the appreciation of the value of the asset itself, the shares, not necessarily dividends. So it will always go back to you as well. What is your vision? Are you interested in getting dividends all the time or not. So you need to also know what your goals is before even starting at the financials, because then you need to know what exactly are you looking for. For somebody else, whether they issue dividends or not, it makes no difference. I just want to know, are you going concern or not? For another individual, they want at the end of 3 months, 6 months, they must see that tick tick tick, dividends has been gained.
Okay. So the first statement that we've looked at, is the going concern note. That's for me, that blew my mind. Actually, you can see whether the company is going to be here for the next year or not. So what is the next big thing for you?
I would say for a person to look at the financial statements themselves, the actual statements within the financial report.
Okay. What are those statements? Can you mention?
Statement of financial position.
Okay. Before statement of financial position, guys, you need to look at that statement. Or explain it to me in a very simple layman's terms.
It shows the financial position of the company. So
so you just explained it to me like, don't do me so. It just shows the financial position of the company. Just like, how can you not get it? Okay, I get it. So basically, it shows the position the company is at on a financial, from a financial point of view. To say this, it's a snapshot of what
it's a snapshot of what the financial situation of the company is, right? If I use another word than position.
Okay.
As at the last day of the financial period.
Okay.
So let's go to the bank account. I'm going to use bank because I think most of us
understand. Yeah. I like that example, bank.
There's a specific line item that is called cash.
She keeps on touching the mic. I have to. Okay.
Cash and cash equivalents. So cash and cash equivalents has the bank, your normal current bank account.
Okay.
It has petty cash if the company has petty cash. It has your fixed accounts, your 32-day call account, all of those, any cash related accounts, right? And as at the last day of your financial period. So meaning if your financial period ends on the 28th of February, on the 28th of February, how much money did you have in that bank account?
Okay.
Right? So on the 28th of February, the value of your investments, if you have shares with the other company, what was the value of those shares? On the 28th of February, how much did you owe whoever you owe? So it literally just shows you your current financial situation as the last date of the financial period.
It sounds like a very important document, because that's when you can see whether the company is healthy or not, right? Okay, so that's when you find, okay, this is the debt that the company is in. This is the money that is in the company's bank account. This is, guys, so please make sure that you look out for the statement of financial position, because the reason why I think actually that's an important statement is because as much as we've explained the fact that you can have debt, you can use debt to sort of fuel your company. If we can see that you have like a large amount of debt and your assets or your equity or whatever is way less, and we can see that there's probably even your sales are low, how are you going to catch up with the debt? Then that can actually tell you that this company might not be as healthy as you think. I mean, obviously you still have to consider a whole lot of things, maybe deals that the company might want to enter into. Actually, do you find that on financial statements? And where would you find such information to understand what the company's plans are for the future? Is there a way?
No, well, it depends on the actual financial report that the company is issuing, right? If it is simply financial statements, okay, but I guess for the purpose of this video, we're talking about shares that we get on JSE, right?
Yes.
So it would most probably be what they call the annual report.
Okay.
So you've got your financial statements, you've got your notes, and then you've got a section that talks about governance. You've got a section then that would say events after the year end period.
Yeah.
So what are the material events, that will impact the following financial year? So if those projects or deals that you're referring to are considered as material, then they would be reflected. But if it's not considered as material, then you're not going to see anything of that.
So yeah, I think it's actually important to look out for that, because then if you see that, okay, maybe they do have debt, but they have, you know, these many projects in the pipeline, as much as right now they might not be in good shape, but if it's a good company that has a good track record, and you see that, okay, they have big plans, that could be an indication of the fact that we're still going to see growth in the future, right?
Yeah.
Okay.
And then the other the other statement would be the income statement, or statement of comprehensive income.
Okay.
Statement of comprehensive income literally deals with your income and expenses.
Okay.
So your sales and your operational expenses.
Okay.
Whatever you've sold, how much is it within that year? You're going to sit there.
Yeah.
If you have other form of income, be interest income, dividends, rental, whatever else, that's where you will find it, right?
Yeah.
All your expenses, the remuneration, the rent, the etc., you know, all your administration, operational expenses,
Yeah.
you'll find them there.
Okay.
So you have now income less expenses equals to profit or loss, depending on the company.
Okay.
So that statement literally just tells you how did the company actually do in that financial year based on the trade that they do. Because the purpose of you trading is to make money.
Yeah.
So how much did you actually sell? And from what you sold, how much did you spend that on the expenses for the company? And what are you left with? So what you're left with is your profit. If you're left with nothing, then that means you're making a loss. And then it takes you back to the statement of financial position. Did you have reserves that you're using to now pay for these other expenses that your income couldn't cover? Or did you take a debt to actually cover those expenses?
Yeah, I know that's some fire information right there. that is actually, I think, how what is that word? How granular? That's the word, right? Granular. How do you say it? But I'm trying to figure out how detailed is that statement. Is that where you would find if directors are paying themselves too much? Is that where you would see that you guys are paying too much, or maybe there's too many trips, the travel trips? That is it that detailed, or do they just say operating expenses? And I mean, if operating expenses, they put directors' trips or whatever in there, you won't see it. How is there a way to see the drill down to what were you guys really spending on?
And that is why you need to read all the 500 pages.
So the 500 pages will tell you if directors have been. Okay.
So on the financial statements, right? On the side, you have note references.
Okay.
Let's say we are a retail company and our income is, I don't know, what do you like? Shoes.
Okay.
We're selling shoes, right? And then on the financial statement of comprehensive income, it will show revenue. You're only going to see revenue. That's the only thing you're going to see. It's going to say revenue, 2 million rand. That is all.
Revenue, what is revenue, Patricia?
Oh, revenue is your income, sorry.
Okay, all right.
Yeah. So you'll see the revenue, 2 million rand. And then there'll be a note reference, note 2.
Okay.
Then you'd go to note 2. Note 2 will break down the revenue that you have. So if you sell shoes, it's going to show shoes. It's going to show beddings. It's going to show whatever your revenues are.
Yeah.
And then the amount of your revenue.
Yeah.
So that's the importance of the note. And then when it comes to directors, right, there's a note. Well, there should be a note. Some companies might not have it, but then there should be a note where it shows the directors how much each executive is actually
being paid.
Right? So if you don't go to the notes, you won't know. You'll just see the high level information on the statements. But then the good thing about going to the statement first, it will get your attention or your attraction, right? For example, let's go back to the bank part.
Yeah.
You see financial statements usually come with comparison financial year. So meaning that you've got this is 2022, right?
Yeah.
So let's say you've got 2021 and 2022. 2021, there was 2 million rand in your bank account.
Yeah.
2022, you've got 50 rand. So now already that's a red flag for you. Like, what has happened? You know, why is it that we've got so little this year? What are the transactions that has happened? And that is going to trigger you for you to actually go into your income statement to see how much did we actually sell this year and how much were our expenses. And now, let's say my income, my revenue says last year was 2 million, this year was 1 million. You've made less, right? Now you're also interested in which type of revenue did we sell less. You'll go to the note. Then obviously your note will show you shoes 5 rand, last year 2 rand. You're like, okay, cool. Shoes, clearly we did well.
Yeah.
This one, I don't know, bags, last year was 50 rand, this year 2 rand. How? And what happened?
Yeah.
So that's the importance of the notes. It literally shows, it's not in detail in the sense that it will say, okay, in December we sold 2 shoes, January we sold. But it will show you the different types of information that you need in the sense of the different types of revenue. If you have different types of revenue, it will show you what consists of expenses. On your income statement, you have operation expenses. That's it. Your notes will tell you, okay, under operation expenses, I've got legal fees. Then maybe you might ask yourself a question: why do we have such a high legal fees?
Maybe the company is dealing with a big case. Yeah.
Or the remuneration or whatever other expenses, rental, etc., etc., etc. So from there you can see, or you can conclude whether are these expenses really necessary in the sense of how high they are or how low they are, assuming that you've done your research as well of the industry that this company is in.
I love that, because for me, when you're looking at that statement, right, and going back to the notes, it sort of gives you a bit of comfort, especially in a situation where, I mean, with COVID, right, we saw share prices plummeting, right, just naturally because people were panicking about the pandemic, not necessarily that other companies were not doing as well. So when you actually see, the share price plummeting, and then you go back to, that information to see, oh, the sales were this much the previous year, and maybe they're even higher this year, then it tells you, oh, this company is still doing very well. It's just that because there's a global issue, it's being affected because of that. So it's quite an important thing to look at, because then it tells you, okay, are we in trouble? Is there a real problem, or is it just investor fear that is making the share price drop maybe in certain instances? So I really like that point.
Sorry, just to cut you also. For the last 2 years, because of COVID, another note that has been included, it's a note that literally talks about that.
Okay.
How has the company been impacted by COVID?
Oh, okay.
So each company then would explain according to their situation. If you think of companies that are in the hospitality, they were impacted.
Yeah, no, truly.
And now, if I want to invest in Togo-san, I'll be like, oh my gosh, I can't. They didn't make much.
Yeah.
But then that note will explain, like, relax, girl. It hasn't always been like this. It's simply because of COVID. There are other companies that haven't been impacted. They've actually been thriving. We are essential services, and because we're essential services, we're making money, guys.
So what they say in the note, guys, we didn't have a problem. In the note, the COVID note, they'll be saying, hey, guys, no, Tina's right.